Hello, founders and investors. Welcome back to Next Round Ready. I'm your host, Chris. Today we have special guest Kevin Raper from Venture Catalyst. Kevin, welcome to the show.
Thank you, Chris.
So, I always like to start off with the foundation of things. What got you to the venture capital world? Like, how did you get here?
It's a long story. You got a few minutes?
Let's do it. Let's do it.
Okay. I started off, go all the way back, designing for theater. I was very successful in that. I won a big award at the Kennedy Center in undergraduate school. And that kind of opened the whole world up to me design wise. I worked in Prague, London, Berlin, Toronto, Las Vegas for a while. That quickly led into TV and film. And that was kind of my 100 plus hours a week up until COVID. The world shut down. I no longer had that income and that validation and those 30 million people seeing what I did every week, and really wasn't sure why I was living, why I was doing what I was doing. And it was this whole existential moment at that time period. My wife was working for a startup that did post-harvest solutions for cannabis in New York. I invested about 150,000 into that company and had quite the inferiority, this imposter syndrome, and was just trying to learn as fast as I could. I kind of jumped in with some go to market, bringing my design experience from film and commercials and TV, and learned a lot. And I don't know, felt like I was always two steps behind. A year or so later, we had the writer strike and shut down again for 9.5 months. I think I had 4 or 5 more friends die at that point. I went to detox. I got sober and really started to re-examine what I wanted out of my life. And it ended up being working with startups and founders and solving problems and investing in people. I feel like at pre-seed, it's the people who are going to make or break it. They may pivot 3 times. YouTube was a dating app.
Right?
Places pivot. But I've just really had this amazing journey since then. And I think now I have 17 companies I've angel invested in. I've started a fund. We're working on a venture studio and a foundation. And, I don't know, it's just the most amazing ride ever. I'm really grateful for where we are now and even how I got here, as difficult as it was for a while. That's how I got here now.
That is interesting. So, how do you find the companies that you invest in? You said you're nearing 20. How do you find the companies you want to put money into?
Okay. At this point in my life, they find me. I feel like I get to do 1 or 2 founder calls every day, pretty much. When I was starting to put together venture catalyst stuff, my partner said, "You're really not participating on LinkedIn." And I'd always thought of LinkedIn as like Facebook for business folks. So I never was involved. I started doing 1 or 2 nice posts about other people every week. And instead of focusing on me and what I was doing, talking about others, and that really just build and build and build and build and build exponentially. And yeah, that was kind of the basis of it. A lot of deal flow now. I'm also involved in like Hustle Fund and some other VC that I advise for. And I don't know, always do good. And you'll do well by doing good, I think, in the long run.
Yeah, I've heard about Hustle Fund is like one of the best places for the early stage angel investors who are like starting out, who are trying to get their feet wet and really understand how the process works and get in on some deals.
And you also know Play Money, Let's Play Money, and Scroobius.
I've heard of Scroobius.
Okay, Scroobius is Allison. We connected via LinkedIn, and she's really educating people that they can be angels. Everyone's so nervous to start, and you just kind of have to jump in and start swimming, you know,
Right? I totally agree. You can't
get a little skin in the game.
yeah, you can't hold yourself back too long because then you're just missing out on opportunity. And it's just constant. And then once you put that angel investor in your name on socials, that right there alone is going to inspire some deal flow. Just putting it in your name. So, what's one of the things that really differentiates you and your fund and what you're doing in the investor space?
Right now, there's an interesting product that a friend of mine, Randall Andrews, and I are building. We call it the Fulcrum. And I started working with more and more like leadership assessment tools this past year in helping to determine how founders are going to act and then how co-founders might interact together. I see a lot of times small teams sort of implode because they don't have great emotional intelligence or great communication skills. So we started with stuff like the Myers-Briggs personality sorter and the DISC assessment. And then we brought in some emotional intelligence assessments, one called the failure index. And we've been building one I'm calling the grit assessment for a while now. And with the use of AI, I can start to compound these things together. And then the way I ran into Randall was working on building a tool to help neurodivergent individuals understand information better so it would translate it into the way they processed information. So if you're detail oriented, it would be detail to big picture or vice versa. And I told him his app didn't work for me. A lot of times when he had A or B, I wanted both or neither. And he came back a week later and he said, I built you your own app. So I started taking all the other leadership assessment tools and putting them through that, and it's been phenomenal tools so far. So we built that, and then we're sort of doing a modular version where you can take the different founders and put them together in the same system and see how their strengths and weaknesses play off of one another. And then this week we've been building a chat bot that uses all of that to help translate and interpret an API to your calendar to sort of see like, or your Slack. Oh, you're being really terse this week. Maybe, we need to work on some stuff. So that kind of tool that's just really founder focused is really where I'm loving being right now. The other stuff we can solve, that's something that's hard to solve. You
Wow.
can teach empathetic people to be doctors, but it's hard to teach doctors to be empathetic, if that
Mm.
makes any sense.
That's a really interesting breakdown because I find that the founder is the most important thing that an investor is looking at, even
In my
outside of the
opinion.
team. Yeah.
Yeah. So
And
especially
so,
early on.
what are like three traits that you look for in a founder then? That, like, if you see these three things, you're for sure going to want to invest with them or work with them long term.
Okay, so there's this one that's sort of a paradox. It's very strong convictions loosely held. You've really got to go out into life thinking like you're confident in your own ability. And at the same point, as soon as you learn something, you have to be able to adapt to what you've learned and to change your perception of the world. You can't wait for the whole world to come to where you want it to be. You need to go to where the world is, basically. So for a while, and this is going to sound bad to your guys, tech bro type founders I had a hard time dealing with, but a lot of female founders, a lot of minorities, a lot of immigrant founders, they already came through life with that how do I observe and adapt to work in this world that's not necessarily built for me. So I felt like they were much more agile as we overcame obstacles and went forward. They had that resilience and that, I don't know, that grit. So I would say that's the biggest thing. I guess I kind of combined three things all into one.
That makes
Humility
sense.
goes with it.
Humility is always interesting because, from my perspective, if you play it a little too humble and you're too small, then you lose the respect in the room. You know what I mean?
Humility is knowing your place. It's not making yourself small. If your place is as a CEO, then it's knowing your place is as a CEO.
And it's okay.
It's just
Okay, this is
being right
interesting.
sized.
So, what's one of the experiences you've had investing that really has shaped your thesis to focus so much on the founders?
I don't know where I'd start with that. I'm unsure where to start with that. Can we come back to that one?
Let me kind of elaborate a little bit on the question because I think
Okay.
when I hear somebody like you that's so focused on the founders specifically, it's interesting because I've talked to investors who focus more on the team overall or even
Yep.
product
Yep.
versus the founder,
Well,
where they're not as deep on that.
everybody has the product. The product still has to work, but I feel like if I just focus, I guess that's the where I differentiate is I want those overlooked founders who I think are gonna, I don't know, they're the underdogs that are gonna win. But I don't know, there's a lot of same product out there. And I've been having this argument about moat recently that I don't know. I don't think moats are always the way that VC perceive them. I think if you have enough money and enough smart people in the room, you can always overcome that moat, even if it's IP. You know what I mean? Like I'll go fight a patent later, but I don't know. The people, like that's the hardest part. So, and if they're coachable, like I've got this one company that used to be called VoicePath, and we've pivoted a few times, but there's that resilience and that learning, and I don't know. And I've also got big like Anthropic and stuff like that. That's just about money. That's not about the people anymore. There's my Can you see the board over there?
I can see it. Yeah.
Yeah, that's all. And then these are all the companies, or a lot of the companies I advise on.
Okay. Okay. I got another good question for you. So, if the founder and focusing on them and who they are and the humility, the grit is important to you, what are three things that really deter you from working with a founder? Like three things you could see on their social post or in an email or in a phone conversation where you're just like, I don't want to work with this person.
I guess when they don't listen or we don't have a conversation. But even then, I try and give them the benefit of the doubt to start and do that first phone call, regardless, because I don't know. I've been so surprised. I feel like a lot of the companies I work with now are not ones I would have gone looking for. One of the ones in legal tech, he was sitting next to us at a coffee shop while I was coaching another founder on a pitch.
Wow.
And I went out, I was still smoking at the time. I went out to have a cigarette and he came out and he said, "Can I talk to you about what you're telling that guy?" And I ended up working with the guy next to us who wasn't part of the meeting at all. So just be open. Like, I don't know, at a VC thing north of here, it's the guy I met in the stairwell who I ended up working with, not the person I went to see at the conference. So it's always those serendipitous connections that end up being more, I don't know, they're little god winks.
That's a good point. I think friendliness as a founder is kind of underrated because a lot of founders I know now have a ton of partnerships and a ton of relationships that help their company grow. Or you being friendly is going to help you hire the right team members and really grow the company. So, like, that friendly trait is kind of like a top five thing you have to have. And it kind of plays into being coachable as well. So, this is another question. I love asking people like you this question, people with high conviction. When you're 50 on an investment, when you're trying to decide if you want to go with this or not, what's the thing that tips the scale for you?
That's going to be a weird one. So I prefer before I even hear a pitch, I want to have all the information up front. I've built my own GPTs for about a year now with some of my principles, things I've learned, books that I really admire, other documents I've written, and I build a GPT. And then in that GPT, I put everything I can find about that company, everything from their deck. I do some competitive landscape, and then as my brain goes throughout the day, just keep throwing it in the GPT, and it keeps me an updated investor brief based on how I like to consume it. So then when I get to that presentation, I'm not digesting information for the first time. I can sort of be present with them and I don't know, kind of go where that takes me. And it really allows me to be more a part of that conversation. But I'll say at the end of the day, it's going to end up being my gut. It's not my head always. Like, I don't know. I kind of feel it down here nowadays. But I think if you don't do all of that research and, I don't know, mental investment beforehand, you can't go with your gut.
I 100% agree. I think the gut instinct that we all have is something that it's a natural thing we have, but you kind of have to feed it a little bit with the information and the exercising you do so that you can listen to it more. It's like it gets louder the more you feed it. Whereas if you don't feed it, you can't really hear it. Even if it's talking to you, it could be yelling at you, you can't hear it because you don't really feed that system inside of you enough. You know what I mean?
I totally agree. If I do the hard work all day, some of my best thoughts are in that spot between awake and asleep where you're half dreaming and your brain gets the rest of the work
Yes.
done. But if you didn't do all that work all day, you don't get to that liminal space.
Yes. Okay. I got to ask you about your books now because I think
Okay.
the books are kind of underrated in the investment space. I'm literally reading Venture Deals again myself right now, and I go and get all the books. And some need to be read, and I think some other books need to be studied. Some books are so good you have to read it, take notes, read it again, and
Yep.
then read it a third time to really like grasp the concept. You
So that's
know,
Venture
and
Deals fourth edition that Brad Feld was co-author
yes,
on. Yeah, that's a 10 times read because there's something
yes,
on page 98 you'll forget. Yeah. Um, but another great one,
give
that's another
first.
Brad book as well. And I kind of live by this. So give first if people don't have video.
Yeah, I'll put it in the show notes for everybody out there listening. So, what's another two or three books that you just kind of like you've studied over the years?
Well, they're not always going to be about investing. I think the best investors, the best founders are people who can learn something in one situation and apply it in another situation. I sit on some like due diligence investor committee type things every week, and we have a lot of experts in there. And I feel like those guys are really good in their bucket. And when you take them out of their bucket of knowledge, they don't know what to do. And the
Yeah.
people I want to work with can take this bucket of knowledge over here, apply it in a novel situation. And that's how we're going to win and get new things invented in this world, new solutions. You know what I mean? I can learn how a door functions and go and apply it in another situation down the road. So it's not always have to be an investing book. It can be a book about, I don't know, how Hemingway wrote and how all the things he didn't say, 89% of it was stuff that he developed and never said out loud. And it made the rest of those couple of words work so much harder. I don't know. Know your
I'm with
market,
you.
know everything.
I like to read the sci-fi books. Those kind of,
Yeah.
I don't know why, they connect the dots for me when I'm not thinking too deeply about business. I
Yep.
can make progress faster.
Okay. Neil Stevenson, is he a guy of yours?
Neil Stevenson.
Did you read The Baroque Cycle? He has a lot of more popular ones, and that one's like thousands of pages. But there's this one part in it where it's the development of the modern banking system and writing checks from the Netherlands instead of sending gold on a boat to London. They're using paper checks. I don't know, things like that where I'm like, brilliant. Or the history of the Mongolians and how they're conquering different cultures and not inventing anything, but saying, hey, abacus, that would be good over here. Hey, credit, that would be easier than moving cows across the continent. We'll just take certificates that are worth cows. Like all of these
Yes.
things, you're like, holy shit. The
Yeah.
best way they ever conquered a city, in my opinion, one of the coolest ones. So Chinggis Khan comes to this city and they says, we'll leave you alone if you give us all your cat. And they're like, okay. So they give them all the cats and they tie a long string to their tail. They put a ball of felt on the end, like horsehair dipped in oil. They light it on fire and they let all the cats go. And they conquered a whole city without ever going inside. All the cats went home, climbed in the house, and burned the houses down. I mean, that's brilliant.
Yeah, that's why I try not to get too deep into business sometimes because
Yeah.
you kind of got to step out like and see it from a bird's eye view and reading other types of information or my thing too is documentaries, just weird random stuff on YouTube. It just makes you see things differently and think differently and then when you go back to the table, you're like, "Okay, I got this new concept." And then you can progress. Like I've been doing that with the content in the podcast space here, like with this show specifically. I have some incredible things planned and it's already working out. So this has been really, really fun. We turned this into a complete like nerd session. Like we're going off track
I'm
completely.
sorry. Okay. People will enjoy it. They get to know the people.
Right, right. Okay. I got a couple more. So what does your typical investment look like? You know, are you focused on specific industries? Is there a specific check size you go for?
As an angel or in the fund we're building? You want to do angel?
As an angel, yeah.
Okay. My typical check size smallest are usually 5K. Largest so far has been 150K. I like to have enough. Well, I like to have pro rata rights. I like to be able to play along as we go if we win. I don't know. I guess is that a good start with
That's
that?
perfect.
And then even when I can't or don't agree money wise, I've often stayed on as an advisor and given my perspective on things and how to succeed better. And sometimes that's been a lot more valuable if I can take like $4 million valuation and be a $40 million valuation in a few months. That's a lot better than if I put in my extra $50,000 right now. So stuff like that has been really interesting. One of the companies I'm working with right now that I thought was absolutely dead for almost a year is a social media app that's relaunching soon.
Really.
And maybe we should talk about it offline.
Offline,
We'll
offline.
see.
No, no, we don't
Okay.
have to put it in there. We don't have to put it in there.
Okay.
Okay, okay. That's and I love asking that question because a lot of founders I talk to, they don't understand the, I guess, the gap in terms of what angel checks look like all the time. They always think it's either a million or nothing. And it's like, no, you can work with some angels at the 50 level, at 100. It just depends on the angel you're talking to. That's why you need
Yeah.
to talk to more angels.
I'm leading an SPV right now for a female founder who's in the death tech space. She does trusts and estate planning as a employee benefit. And what I'm doing with that one is I'm basically rallying the troops on play money and saying, hey, let's all put in small $1,000 to $5,000 checks to help close this round. So
Mm,
that works as well.
it's very
And
much
you get investor
possible.
updates and you're a player and now you start learning. And once you start learning, you'll make another one and another one and another one. And yeah.
I love it, man. I love it. I think the angel side is super interesting to me because there are rules to it, but I also think if you're a founder, there's a lot more freedom within the angel space if you have the right angel investors that you're working with. Is it's not as strict and strenuous as the VC world is all the time.
And the people you put on your cap table, I think the founder should interview the investor as much as the investor should screen the founder. Like there are people you do not want on your cap table. Um, yeah, all of that. It's a marriage forever. It's a marriage till you exit.
Mm. Man, okay, this has been an incredible conversation, but my last question I gotta ask my investors all the time is what's that one thing you're looking for in a company you're going to invest in? Something that is just a non-negotiable. It could be with the founder, the team, product, anything. What is that one just mandatory thing that has to be there for you?
Okay, I'm gonna make it into two because one, it does have to look to me like it's financially viable and we're gonna win, and it doesn't have to be a X win, but I do like a 30X win. But for me these days, it has to spark my curiosity and my imagination and make me excited. If it doesn't make me excited, I don't want to play this game. I'll just go and invest in my favorite mutual fund. I could do
True.
that
Yeah.
through Vanguard. So it's got to be a lot of fun. One of the ones right now I'm doing, they're underwriting loans for small business owners, underserved groups, usually minorities, and usually it's the five to $50,000 range that banks don't really want to touch. They spend the same amount underwriting a thousand as a 500,000, and also just trying to figure out like code, code switching.
Yeah.
Okay, so we're going to use a different vocabulary with a small business owner who may not have finished high school or may not have gone to an Ivy League college. But then with the loan fund people are very conservative, and we use a different language in getting that money to give out loans. And then the dilutive equity, the people who are helping us scale this underwriting platform, that's a whole different language we need. So we have three different languages and three audiences we're speaking to. And we're trying to build an underwriting system that doesn't use credit scores. How do we say if someone is trustworthy without using that? What kind of behavioral science? And what got me interested, I said to her the first day, I said, do you think just giving them that loan makes them more trustworthy? You know what I'm saying? Like the fact
Yeah.
that I gave you trust makes you more trustworthy. And I was like, all right, I really want to play with this one. So we've been
That's
hardcore for two
interesting.
months now, but it's amazing.
Wow, that's an interesting company. I gotta say, I love those kind of companies too that aren't just another CRM, another Notion. Like it's very, very different and specific to solving a problem that actually exists. Like in the AI space, I get founders reaching out to me every day, and it's always something, something AI. But I'm like, where's the thing, this problem you're really solving that actually is going to help people instead of you just throwing AI out there? It sounds really good, but that sounds really, really helpful to the world.
I guess I'm an impact investor this past year or two. Yeah. We have to
Love
be
that.
doing good to do well. I don't want to do it the other way.
Amazing, man. This has been a great conversation. Kevin, do you want founders from the show to reach out to you possibly?
Yeah, I always like meeting new people.
All right, I'll make sure I link you up in your website, in the show notes, your LinkedIn, and everything like that. Thank you for being such an incredible guest.
Thank you, Chris.